I think let's talk real here. Do you think that prop firm is going to last till the end of the year? Alright traders, welcome back to Lot Size Matters. This is episode 2. If you missed episode 1, click on the link above here to go check that video out so you're up to speed with what's running here. But today in part 2, we're going to have the man in the hot seat, Mr. Chris Markable. Chris, how you feeling today, bro?
Feeling good, man. Good to have this sit down again. So ready to dive into it.
I think let's start off here with continuing from our last chat. Where would you say your trading style is leaning most to at the moment?
It's actually weird that you asked that question because for most of the guys that don't know, like I've studied all of the trading courses that are out there, all of the trading styles. So I know all of the styles, unfortunately, which is not necessarily a good thing because it also convolutes your thinking when it comes to your trading. But weirdly enough, I've been leaning towards a more intraday position trading. I don't know if you've seen. And I think it also comes down to where I'm currently at in my own life. So you don't necessarily have that time to micromanage trades. This is also, weirdly enough, you would think it's more stress, but you give your trade such a high percentage of going against you and still being on the right side at the end of the day. So I want to almost say it's leaning towards a position trading where you've got your bias for the day and you trade towards that bias. Or if the markets are extended like we've seen this week so far for the guys that have been on the live stream, we've been fading the moves. So I've been leaning more towards the position trading, which is feeling good.
And I think for a lot of traders, we always talk about how we always adapted. I mean, we spoke about in the last episode how my trading evolved and kind of got to where I am at today as well. But with yourself, what do you think was the reason or what caused your trading to evolve?
I think it's to do with where you are at in life and in business, in life in general, and I don't want to say your need in trading, but there's certain processes and evolvements you go through in your trading, and I think you never really get to a stage where you'll be completely happy with your trading. But you can have weeks. For instance, I almost want to say touch wood, the last 5 weeks, I felt very good about the execution, the trade management. It's usually, I think you would have seen in trading, sometimes you'll get a very good entry, but then your trade management lacks a little bit. And then afterwards you're thinking, flip, my trade management wasn't on point. Or you'll have a bad entry, but your trade management was good. Then it was like, let me rather go back to working on the trade entry rather. So for me at the end of the day, and I think yourself having been a professional athlete as well, you almost want to gauge your performance. Yeah. And a lot of times, even though, let's say you came out on top the day, be it a game, rugby match, or be it trading, there are days where you did win, but you're like, it's an ugly win. It's not how I actually planned to do it, or that you didn't give it your all. So for me, at the end of the day, it's going back and saying, listen here, this was my trading performance for the week. Can I improve, or do I feel like I really produced a good result in terms of my effort?
I think we mentioned it the other day, going back to kind of when we still met. You used to trade a very like set stop loss, and as we say now, they're going this more intraday style of trading. Your stops are bigger now. Would you say there's a difference in managing those trades now when you're in drawdown because they're kind of a bigger? Yes, your lots maybe your variant change, but I think still always seeing it not in the blue, seeing those red numbers is never comfortable. Is there something that helps you manage that now?
I've actually had a mindset shift, and weirdly enough, my stop losses are still the same amount. It's more calculated now on the average daily ranges, so there's still theory behind it. But in terms of how I positioned my mind was that I'm thinking of my trades almost as investments. So when you invest into a stock, you're not sitting on your phone micromanaging it because you're holding the stock.
Yeah.
So unless you sell out at a loss, you haven't technically realized that loss. So now in trading, it's the same for me, is that my stops are way wider, but I'm giving the trade enough room to breathe so that if it goes against me, I can average in to the point where we've discussed it so many times. We know what the market does before a big move. And if I'm stuck in a consolidation close to entry, then I can manage it. But in terms of scalping, there's actually very little room for error. So now, because you're scalping, you have to throw on massive size to do the work for you. Where with the intraday trades, you actually let time do the heavy lifting for you. Because you enter, you'll hold a trade for 3, 4, 5 hours. And instead of your lot sizes doing the work, it's now actually the time doing the work for you. So you can get the same result from scalping. It's just a case of the time component
You've
between
almost
it.
used now time to leverage your trading.
Exactly. So you've got less lots, but now more time. It's less stressful as well. I don't know if you've seen for yourself. You still very much a scalper, but I think when you started off as well, there was a time when you also actually almost position traded, where you would leave the position. I think we still discussed it last year when you were developing the grabber kick. The grabber kick is very similar to the way I'm trading now, where you would enter and later the afternoon you would exit. And it's like, flip, bro, how did you catch that massive move? And you're like, I'm expecting price to hit there and it's going to come down here.
Yeah, it's one of the two. But I mean, we talk about this now, and especially I want to say with intraday trading, there's a point of letting the trade breathe, let's say, but there's still certain criteria that have to be met, as you mentioned there. In saying that, is there a trading rule for you that's like a non-negotiable, that you don't do that no matter what happens?
Yeah, so there's one. I'm not going to buy at the daily highs. Purely, even if I'm bullish, I'll rather stay out. Secondly, I'm not going to sell at the daily lows. So we've seen it so many times, and in the past, I think 3 or 4 years ago, I was in a not even a losing streak, like this weird break-even phase, and that is actually where I developed. That's why I always on streams tell the guys session highs, session lows, because I journaled all of my almost 300 trades journaled, and the one thing I picked up was most of the losses I was buying breakouts that failed, and those breakouts are usually at a session high or a session low. And then I realized, okay, there were winning trades, and those were massive trades, but they are very rare that you see them. And for the most part, it's usually a fake out, like a little pump and then it shoots back up. And I want to almost say that alone can save a lot of traders a lot of money. But just even if you're bullish, you're not buying at a session high. The only time you know when we buy is at an all-time high,
Yeah.
because then everyone wants to short. But other than that, I'm not buying or selling a daily
I like
high.
that. I like that. I think we're gonna flip the switch a little bit here today. And last time we spoke about my journey in the prop firm space. Obviously, me being a really, I'm not gonna say super successful prop firm trader, but I found success there. But I want to talk more your experience in the prop firm industry, but from the back end. So when it comes to the challenge phases and the payouts and all these things, what is something, if let's say like a pattern you've noticed with traders in the prop firm space?
Yeah, weirdly enough, the prop firm space, if you told me 2 years ago that the prop firm space is such a tough nut to crack, I wouldn't have believed you. Weirdly enough, the prop firm space is very competitive. It's a very difficult space to break in because I think it comes with, it's an emerging market, if you can call it that.
Yeah.
We're still in the emerging phase, and with somebody or with a business or a sector being in the emerging phase, there's that trust component that's lacking. So now you're sitting with a relatively new business, and even though prop firms have been around for quite long, it's not really that long. It's not an established sector yet. It's starting to establish.
Yeah.
So now, are you guys good? Go. So now what is happening is you've got that new business, and you've got now to try and get the traders' trust. So for us, that has been the big part to ensure that, listen here, for us to be around for 10, 15, 20 years like an FTMO, you have to do the basic things right. The trading conditions need to be good. You need to honor your payouts. You don't want to have disgruntled clients like we've seen on stream with certain prop firms breaching clients for making money, breaching clients for actually placing withdrawal, which is absolutely crazy. But nonetheless, so prop firms is a very different animal to FX brokers. I've worked for the last 7-8 years with various international brands, and brokers is a very fast-paced environment, very high margining business, where prop firms, weirdly enough, the margins are much smaller, and the risks are actually much higher than a FX broker. But in terms of the back end, from what I've seen so far, is that a lot of traders actually pass. A lot of traders actually do well, but in terms of, let's call it the funded stage, it's, I don't know if this is the mindset, and you guys can comment below what you guys think. It's like the guys don't value the funded account. Like they don't see it as an asset. So what I've seen is that the guys will get a payout, they'll work towards the payout, get their first payout, get the account refunded, and then it's almost like at the casino. If you had your initial money that you played with out of the pocket and you're playing with the house's money, then you go big. Then it's like I'm shooting for the stars, where instead with one of our traders that I mentioned as well that won an account last year, that's been consistently, we must actually interview him. I've never seen a trader so consistent. He's been consistently withdrawing from an account that is won, a $10,000 account. I think his total withdrawals are sitting at close to $6,000 or $7,000. So you would think now that guy that got the account for free would now try to full send it, but he's actually scaled that account twice. Yeah. So it's the same with you. I think me and you had a chat last year, and I think we can agree you were a very aggressive trader.
Yeah.
There was a point where you would go in, you would blitz an account, phase 1 done, wait 5 days, phase 2 done, boom, get to the live stage, go balls to the wall. And I think me and you still had a discussion, and I said, Keeks, flip man, you blasting through the phases to the live stage, why not just tap everything down? Yeah. And I think it also comes back to your personality, where you want to see results quickly. You want to, you're driven, and that almost starts to reflect in your trading as well, where you almost now need to rewire your brain to say like, okay, that is my personality, but in trading sometimes I am going to burn my fingers with that. Yeah. So now what you've done is you've come back to a very selective. Like if you even take yourself as a trader, if you had to take a screenshot, this is the Keegan from 2 years ago, and this is the Keegan now. It's two completely different people.
I agree with that.
And you've matured from the trader there, even though that trader made money with prop firms as well. This trader now basically knows the value of an asset, and knows the value of an asset that can generate cash flow.
Yeah.
Because you're in business as well, and we all know that cash flow is king. If you don't have cash flow in your business, that's where guys get stuck. And it's the same thing with your mentality. If you can trade, generate a certain amount of money each month comfortably, cash flow coming in, you're not stressed. But you know, I know, we've all been there, when the cash flow is tight, money's not coming in, mentally, now you go on the defensive. Now it's like, I'm not getting new money in. I've got this little bit of money left. Shit, what do I do now? Like, now you're like somebody that goes into this defensive mode where if you go on the defensive, the cash flow is anyway going to stop, and that little bit of money is anyway going to run out.
Yeah.
And it's that weird death loop we also talked about where it's like, it's a bad spot to
Yeah,
be
you
in.
see the traders kind of lose strategy and more they're trading with hopium because they just want that result. They're praying for the payouts and things like that. But I think I want to ask a question here again to lead up with all of that. And this is for the traders, so take notes of this one. When you look at the accounts that are failed, what do you think is the biggest mistake all the traders make?
We haven't really looked that deep into the stats, but what I've picked up on the statistics is that your bigger account sizes have a much higher pass rate, and your smaller accounts have a much lower pass rate. And I think it comes to do with that initial investment, because 7 or 8K, maybe for me and you it's not a lot, but that was your salary many years ago. That was almost triple, double my salary when I started. I started working for 3K a month when I just got out of university. So that initial investment is quite high. So somebody that's relatively green in his trading would rather dabble with, say, a challenge that costs 700 Rand. And they almost use that as, if I get a payout, I only paid 700 Rand. Where a guy that buys a 2 million Rand account or $100,000 account, that is somebody that knows more or less what they're doing. They've been around for a while. So that's the one stat. The other stat that we've seen is that profitability increases with holding time. So there's a massive increase in profitability for traders that trade less and hold trades for longer. So there's a 100% a correlation there. It's not even that I'm trying to put a blindfold over your eyes. It's literally shown, and not just by us, by other prop firms as well. So now it comes back to what we talked about, the position trading. Less trades, holding for longer. We are tilted towards potentially being on the right side. Now it's just a matter of, it's not like you must scalp and hold a trade for 4 hours, but there's a definite weighted bias towards holding trades for longer and being more profitable.
I think the final question, the prop space for now we want to ask, and again, being a bit of an interesting one, obviously myself, started personal, really found my success in funded. Your end kind of being an owner in that prop firm, but you've traded personal. Which one is harder, funded or personal?
Weirdly enough, when we started with prop firm challenges, it was that 30 days. You had the 30 days, you had the resets, and man, mentally it messed you up. It like mentally, I can still remember the one day Jean-Pierre. I must actually get him on a podcast as well. I'd never forget it. That Friday, he had to make something like 3.5%, and he was grinding it out. And he phones me and is like, dude, what do I do? I can't reset again. Like, mentally it kills you.
Yeah, that day 28, 29.
Yeah, dude, and we jumped on a call. I'm like, we're gonna scalp this thing through. And mentally it's tough. But I wanna, and even I failed a challenge, I think it was 4 weeks ago when I did a competitors companies challenge just to check out what they're doing. And I still told you, I completely forgot there's a daily drawdown, because you trade in your mind, you're going, there's losses, you come back with the wins, whatever. And I definitely have to say, to a point, it's easier to trade personal. But then I also have to say there's a mentality that's easier with prop firms than trading your own capital. Because there's a difference between me putting 4 million Rand or 2 million Rand or 8 million Rand into a personal account, because that is realized, that is risk on the table there, where with the prop firm, a 2 million rand account only costs you 8 grand. So your actual loss, the maximum loss you can take is 8,000. Where if you're putting 2 million rand in the market, there something could slip, you could have a flash crash, whatever. So it's there I want to say the mindset is easier on that side, but in terms of the leniency towards a personal account is easier. So it's a give and take.
Yeah. Okay, we're going to speed run the next few. Get your hot takes on some of these. Starting off with indicators.
Indicators, I love indicators. I think I don't know why we criminalized indicators. I always say it, top stock traders use indicators. We've seen that one guy on Instagram making like $2 million a day. He uses EMAs. So I think there was this weird criminalization of indicators, like, oh, you trade indicators. I don't know where it started, but for me, it's a tool. And if you're thinking about trading, we are trading numbers. And if you think about indicators take those values, basically squeezes it down to something visually, for instance, like the EMA. Or for instance, your volume tab, giving you an idea of where the volume is sitting. So I love indicators. I don't think you can solely base your strategy off an indicator, but as a tool, as an augmented tool towards your trading, perfect. Nothing wrong with it.
No, I agree. Your favorite time frames?
5 minutes and 1 minute.
Which one do you execute on?
5 minutes.
5 minutes, okay. Let's go with the trading influencers.
What about them?
Your thoughts on them?
Hey man, I've given up on trading influences. I feel like it's like politics. You can break your brain around it, and you can post stuff on social media. But I think at the end of the day, it's just there's a social media death loop for people that are getting rinsed, unfortunately. And that's where I truly hope and I believe that the legitimate traders in the industry and the legitimate mentors will actually get that big following that they deserve, so that people can see what the benchmark is and not run through, because we've chatted to people that have spent in excess of 200K going from this group to that mentorship, and still they're out of pocket. And they still don't know how to trade. They can't make a withdrawal. So, man, it's one of those things. We can talk about it, but I'm not gonna bother. Like, we focus on what we do. The stronger we get in terms of what we do, I think more people can see the light and say, flip. These guys are doing X. These guys are asking X amount of money. These guys are doing it for free. Even if I pay that, they're not doing what these guys are doing, if you hear what I'm saying. So creating that benchmark, ideally.
Yeah. Now, also, you are quite the investor, but you could only choose one. What are you choosing? Stocks, Forex, or indices?
Yeah, or is there a certain time frame? Am I
For the rest of your life?
for the rest of my life?
Yeah.
I want to go stocks.
Why would you say that?
Just in general, if you look at the generalized market over the last 63 years, if I even go with just the buy and hold strategy, just buying any dips and holding, it's the probability of making money is 100%, because we've seen the stats after every bear market, we've always taken out the all-time highs. So from a probabilities perspective, I know if I'm buying and holding, there's no way I'm not making money. Where if I'm trading CFDs, for instance, where you can buy and sell, now I've chopped my probabilities into a 50-50, where technically with the stocks, if I'm investing into index funds like your Dow Jones, Nasdaq, all of that, the probability states 100% you will make money if you don't count the time. if you can into perpetuity hold index funds, it is almost a guarantee you will make money.
And we're going to throw a little spanner in the works there. Could you see yourself getting into crypto?
Dude, I've got a lot of FOMO, and I say that because I got introduced to crypto when Bitcoin was trading at 8,000 Rand. Guy in my church was actually a big advocate of it. He still showed it to me on his phone, and I'm like, dude, I don't know what this is. And he still told me, he's like, dude, do me a favor. Even if you've got a credit card, whatever, max it out. So I've got a lot of FOMO around crypto, and I always feel it's something that I want to start dabbling into because I know a lot of crypto millionaires myself, guys that I know for a fact, didn't have much left. Basically, scrambled their way through buying certain releases, all of this, to basically 10, 12 million Rand. But again, it's like, where do we start? It's because that's a completely different animal. Like what we do when it comes to stocks, commodities, we get a certain feel for the market. We almost in tune with the sentiment. Where I feel like crypto traders have like their own, even though there's no fundamentals or real fundamentals, I feel like they also have a certain level of intuition around the sentiment, which I think will come in green, and we wouldn't know what the broader crypto community is doing. And I think we could get smashed when it comes to these altcoins and some of these meme coins. But yeah, I would like to get involved.
Then the final one, and I think the hot take, especially for those that haven't seen, you literally starting a series on it at the moment, but AI in trading. Is there a space for it in the future?
Dude, this is a topic I'm very, very excited about. Not just in trading, I think we've seen even in our own business. I'm always thinking of ways how to incorporate AI and how to actually leverage it, even as an assistant, as somebody, as an analyst, as a copywriter, all of that. So I think to a point, there's going to be a time where AI is going to bring you towards this point where you're still going to have to make a decision. As much as it's going to give you all of that information, I still think there's going to be a part where that internal intuition regarding trading comes in. Because even when we do our daily prompts with ChatGPT, we still internalize what information we get. And then me and you would sit and say, Keegs, but what if Iran does this? What if this is just a ploy? Like, take this morning. They came out with a ceasefire, and I chatted to Keegan, and we still said, but what if they're doing what Donald Trump did, saying that he's going to give a decision in 2 weeks, striked over the weekend, where they say it's a ceasefire, everyone's on the back foot, and then they attack. So I still think there's a level of your own intuition, but I definitely think if you are a trader, to not sleep on it, to really start positioning your brain to use it. We've got the paid version, but there's free versions as well to really leverage it, because I don't even think we realize the power of it. It's a crazy, crazy tool, man.
Yeah. Now, Chad, for those that maybe didn't notice, I think before we wrap up, we're going to talk about the elephant in the room. I saw you making some mentions there earlier, and this is going to come from, I also have my input as a prop firm trader, and yourself, as you say, from the back end. When a prop firm starting to make all these magical hoops for you to jump through, making it impossible for you to get a payout, telling you if you make too much money, they scrap your account, they breach you. If you put a withdrawal in, they breach you. Do you think that prop firm is still going to be around by the end of the year?
Personally, for me, I feel like a prop firm should have rules. I think it's a very relational transaction when it comes to prop firms. As much as we want to build this wall between a trader and a prop firm, and it's almost like the trader's on his own mission and the prop firm is on its own mission. There's actually a level of community within the prop firm space, if you think about it. Because ultimately, a prop firm wants to gain the trust of its users, and you obviously want to build your community of customers because there's mutual benefit between if a trader's having a good experience and the prop firm's also getting a good experience. So for me personally, when a prop firm starts doing that, it usually signals one of two things. I always say, if you see prop firms making these outrageous discount codes and it's like buy one account, get 5 free, 60% off, 90% off, then that's usually a burning house. Like when I posted a year and a half or 2 years ago about the funded trader, I still said there's signs that this prop firm, and I think I still gave it 6 months, and within 2 months gone. So I feel like there's a level of the prop firm needs to give a little and you can take a little, but it can't be this one-sided affair where the prop firm is almost unjustly, basically, how can I say it? The trader is handicapped. The trader is already handicapped. Trading is already hard. And now you've got a prop firm that's like, all right, trading is not hard enough. We're going to make sure that we fully handicap you. We're going to put you in a wheelchair. We're going to break your legs. We're going to tie your hands down. And now we're going to be standing, which is not right for me. Like, keep the playing field level. It's a give and take. You can't just take. Because my mindset is this is a prop firm that is like, we don't want to pay anyone out. Like, we're going to make rules that are just palatable enough, but that purely is advantageous to us as a prop firm and not the consumer. So for me, I would say as a consumer, it's terrible what they're doing.
No, because I think I agree with you. It's a mutual thing at the end of the day. For the prop firm space, it's a lose-lose because a prop firm like that goes around doing that. They put a sour taste in the trader's mouth. That trader won't go to another prop firm now because he had the bad experience. He thinks all prop firms are like that. But at the same time, I think it's becoming a problem, and it goes back to, I hate to say it as much as we always talk about, I'm so proudly South African, but especially trading in South Africa, it's a lot more toxic than it is in other places. And it's the same thing it's seeming to even get to the broker spaces, to the prop firm spaces. It's almost like we need to try to find a way to kind of pull certain people back from being able to open these companies.
I think the big thing for me in business in general is you need to always maintain a certain level of excellence. And if you think about it, especially in the financial industry, the entire Phase Act and the General Code of Conduct falls back on treating your clients fairly. That should be anything you do in the financial sector should be with the client in mind. Not thinking about your own advantage, not thinking about how you can make money, but thinking about how do I treat my client fairly. And any decision you make, any rule you bring in, anything you do in your business, if the client is not at the center of your thinking, then obviously you are not acting in good faith as a financial services organization. So even for us, we always sit down and it's like, how would the consumer feel about this product? How will this benefit the consumer? How can we make this palatable for the consumer? So it's always the consumer. But if you focus on how can I get the most amount of money out of the consumer, you're on the wrong side. And I think businesses need to come back to that. Because if you've got a happy client, you don't have to chase 10,000 new clients because your clients become your biggest marketer. If you had a good experience, you don't even have to chase new clients because your clients become your marketers. Where I think in this space, it's like churning through clients. Like I get these clients, they get a bad experience, now I need to replace them with new ones. Where instead of retaining clients, guys are always just looking for new clients.
Yeah. Guys, on that note, if you are looking for a prop firm, check out the description. There'll be a link there for you guys with a discount code for Vault Funder, our partner prop firm. Again, the only prop firm in Africa that till today has not denied a single payout. But as we're going to start getting ready to wrap up, Chris, I have one more question for you. For those that are going to come and trade with Vault Funder, please, ahead of the time, can you explain the consistency rule to them?
So yeah, the thing is, our consistency rule is we don't have one, because consistency rules for prop firm is for bitches. Okay.
There you go. Chad, and on that bombshell, we can see you guys.
We'll see you on the next one.
Yeah, Chad, make sure to go check out one of the previous videos. Again, if you like, please make sure to follow, like, subscribe, and we'll see you guys in the next one. Cheers.